Like, to me, owning Dr. Dre's publishing is priceless.
Yeah, it's timeless music.
Yeah, it's like owning like a Picasso.
Yeah, I mean, maybe it's just the state of rap. If you turn on Power 106, which is the radio station, hip hop radio station in LA, it's all 90s and early 2000s
You
music.
hear Dr. Dre every day.
Yeah.
All day, every day, you're still playing Dr. Dre.
Mm-hmm.
Like,
they did the halftime show. That's as mainstream as it gets.
that's what I'm saying. Like, this is like for 200.
So why would you sell it?
Forget why would you sell it. Like, I'm shocked at the price.
Maybe he needed the money.
But I'm saying, how has no one else realized that this is like owning Van Gogh?
Yeah, I think if you're seeing the scale of all these private equity companies just coming in the last 2 years, and they do the math,
Yeah.
it's going to be paid back.
Yeah.
Hash.
Ladies and gentlemen, group chat.
Hash.
It's $1 trillion. Hot.
All right, Kathys, we are back for another episode of the #1 podcast in the world, but more importantly, the #1 club in the world. The biggest winners of the week are everyone that got out there and joined the Chatty Cathy Club. A few hundred people have now joined us in this special momentous occasion. The first launch is we are launching a private Discord for all of the club members where we'll all be in there, and it'll be our proper chat room for holders. And then I teased a hat that we're going to get everyone also. But more importantly, we want you to be a part of the discussion on how we grow this club. Everything from opportunity boards, job boards, to introductions to people, find out where everybody lives. It's pretty exciting that we have this like core group of people that I think can help build something very, very special.
Yeah, totally. It's very cool to see the overwhelming support for it.
Yeah.
And people seem generally excited that they're going to get value from it. That's the whole point of this.
Yeah. And so it's still open. We have not sold out yet. So if you're still interested, let us know. But once it's sold, it's done. So don't ask me, oh, I wish I bought one. And I'll tell you this. There are some heavy hitters who have bought.
Oh, yeah.
Like, you would be in extremely good company when you find out who the other club members are.
And at the end of this episode, you might be able to monetize a way of being in the club.
We've already figured out how you could potentially get a loan against your most valuable asset in your portfolio.
Mm-hmm.
Yeah, I'm excited about what the journey of this. I appreciate everyone that supported. It means a lot to all of us. And the other thing that I talked to Anand about was office hours.
Mm-hmm.
So Anand's going to put up a Calendly and you can book some hours if you're a club member.
Yep.
You want to talk investments? You want to talk football?
Yeah. You want to talk divisional round games?
Maybe you just put a topic. Anyone want to talk about the divisional round games? So it's going to be exciting. It's going to be a really exciting journey. But we also have a big episode. We're talking more layoffs coming out of Microsoft, talking about the richest people, Shein, Dr. Dre, Peter Thiel, Beverly Hills crime, and so much more. And then we have an incredible interview with an OG Cathy who now launched his new business with his business partner in the fintech space. And this is for you club members. Stay tuned, because as the value of this asset increases, you are going to benefit.
Yep.
All right, let's get into it. All right, everyone. Welcome back to Group Chat. We got to kick it off. Our favorite, you know what the hottest thing on TikTok is for us? If you look historically where we get a lot of views, it has to do with either telling people to go back to the office, quiet quitting, quiet hiring, anything to do with jobs or layoffs gets traction.
And
Elon's hit or miss because there's so many people talking.
Yeah.
But if you start telling people that quiet hiring, you're going to have to do more work. If you tell people on TikTok they have to go do work.
Outrage
culture. Luckily, if you work at Microsoft, you might not have to do more work. They just hacked 10,000 people.
for no reason.
They really don't have excuse. They're shitting cash.
Yeah.
They basically are going to take over search.
Yeah, they $10 billion they just had sitting around in a speculative trade.
Literally speculative. And some of these are veteran employees. Like I saw a guy work 30 years.
Yeah, sad.
So 10,000 employees.
I mean, just you take it a step further. If Microsoft, which is best in class company in the world, one of like the 3 best companies in the world, probably, they just were like, yeah, we're just going to get rid of 10,000 people. Why aren't we hearing companies that are actually, in trouble, not doing the same?
The problem is, like, name a company. Who should be hacking people? That's in trouble.
Not trouble, but like Macy's. Retail's still,
They had a
good year, but we're moving into a slower year.
They've been cutting, you know what I mean? Like they've been cutting for the last 5 years.
Yeah.
They're not as bloated as, I'm sure they are bloated, but I don't think they're bloated as they were 5 years ago. Like I don't think it's as bad in some of these companies.
Yeah, I suppose.
I mean, jobless claims came in hot. Like there's less people. I mean, like people are going back to work.
Yeah, no, it's true. It should be scary for everyone if best in class, no reason to cut people.
I think it's easy to cut.
This is what I said a year ago, that the Microsofts of the world are going to be able to do it with air cover because so many people did cut last year.
Yeah.
And people are going to cut even further, that they're like, hey, we'll just get rid of our underperformers and no one can say, what are you doing? You have probably 150 billion in cash.
Yeah.
And they did it.
And yeah, they'll be rewarded for it.
Yeah.
And then the week before, $10 billion investment.
Yeah, unbelievable. In a company that's rumored to be losing $3 million a day.
Sounds like a good investment to me.
It's more, because how much bigger ChatGPT is today than 3 weeks ago?
Oh, yeah. I mean, the whole world is on it.
Yeah.
Literally, like...
We'll get to it, but it is the talk of Davos. That's all everyone's talking about, AI and ChatGPT.
We were there before Davos, okay?
Yeah, of course.
You guys just got on that shit. The other big news is Netflix came out. Beat. Netflix earnings came out, sorry. They beat on users. They added 3 million more users than expected. 3 million.
Right. That's huge. So they sandbagged their numbers, their estimates. There's nothing that happened in Netflix in the last 3 months.
A lot more content. There's way more content. Their issue was, in a lot of people's eyes, the content was off. There's just more. I go on Netflix maybe, 3 times a week. I'll turn it on. There's so many goddamn shows now and movies. Doesn't it feel like it's way more?
I don't really watch it, to be honest.
You don't watch Netflix?
Not really. Maybe if there's a hot documentary.
Wow, there's great shows on Netflix.
Yeah, maybe
New season of Emily in Paris.
So, I mean, they're getting rewarded 6% up in after hours. It's purely based on 3.2 million more subscribers added than estimated. And this is how this game worked, because I actually have a close friend who was a CFO of a publicly traded company. He basically explained after earnings, you basically go on the road because now COVID's probably Zoom, who knows. And then you go talk to all these investors that invested, that have big positions in your business. So they tell you after earnings what they liked and what they didn't like. And then you go to investor conferences and you just sell. So the CFO's job is to sell the business. It's more like a sales job. Yep. They're not like in Excel figuring out which line item, is where. And I think people in 2022, everyone got hit pretty hard, and everyone's now learning how to tell a different story.
Yeah, I think I mean that should have been, if you're a seasoned CFO, that should be your story. You should constantly be evolving your story because there's macro conditions every year that are different from the year before.
I just don't see how you can add 3.2 million subs, which is like a 75% beat, without sandbagging the estimate.
Yeah.
Without Netflix having like some I don't. Did they have like a legendary show in the last 3 months?
I think for young people, they have
Like
a
a
lot
Game
of
of
legendary.
Thrones, where everyone's like, I have to go to Netflix.
You're not the audience. They're going younger. They're not going older.
I don't know.
All those
3.2.
if you look at like the shows,
suspicious.
if you look at the top 10 shows and top 10 movies, it's young. It's young people.
We should pull it up.
I watched one of them last night or whatever earlier in the week. Ginny in Georgia.
What's that about?
It's a mom and her single mom, 2 kids. It's like a teen bop show.
It's right up your alley.
Yeah. Ginny in Georgia, number 1. Dog Gone, about a dog, is number 1 for movies. Vikings of Valhalla, number 2. New Amsterdam, The Circle, Social Media Competition, Wednesday, Walking Dead, Love Island, Kaleidoscope, Pressure Cooker, Emily in Paris.
Look, I'm not saying people don't like their content. I don't watch that many TV shows in general, so I am not the audience. I know that. But this kind of beat is ridiculous.
They're booming. Great shows. They're doing a great job over there.
So he stepped down as CEO, Reed Hastings. That's a pretty big
That is
news. He's going to remain on as chairman.
Okay.
He had a co-CEO, Ted Sarandis, so he'll just apparently keep going.
So chairman now.
Yeah.
Okay.
So not day to day then.
Wow. Big move.
He's Bob Igering himself out of there. Maybe he's setting this guy up for failure, and then he's going to come back in 2 years.
Save the day.
Yeah.
Handed him a nice quarter.
Mm-hmm.
See what happens.
Got a stock pop as last quarter as CEO, so he's a hero.
Yeah.
He sandbagged his numbers and got 3.2 million subs.
That's a nice gift. All right, let's move on. Fashion tech news. The e-commerce darling Shein was recently rumored to be valued at $98 billion. It is now saying that they are trying to raise money at $65 billion. They're trying to raise $3 billion at that valuation at 65. Huge cut.
It's a big cut because the $100 billion valuation was within the last 4 or 5 months.
Yeah. So their stock went down 33%.
Yeah, which is in line. I mean, if it was public, it'd be a $15 billion company.
Probably less.
Yeah.
Yeah. Shein, we really don't know their numbers. We've heard they're doing 10 billion. Some people think they're doing 20 billion. So everyone told me they were profitable.
I mean, they're definitely not profitable if they raised $3 billion.
Zero chance they're profitable.
It's the same investors. Well, they have to. They have no choice.
Yeah, they're all in on this thing.
Yeah.
So the investors are going to go back and give them more money. Look, I actually believe Shein is an incredible business. What they've done is phenomenal. The reality is it has been subsidized by venture dollars at a very, very large scale. So while the supply chain is impressive, their tech is impressive, and I'm sure there's stuff on data that you could say is impressive, we've now learned that at scale, if you're not profitable, it doesn't work. Mm-hmm. And no one's going to continue to reward you for that. And I think I'm really curious to see how this plays out, because the only liquidity opportunity for Shein now is going public.
And they claim they're still on pace for this year, which I don't believe.
So if you go out and let's say you're doing 20 billion, but you're losing 4.
Yeah.
What are you worth in the public market? 5 billion?
Yeah, not much.
That's Macy's. Macy's is profitable and does 20 billion.
Yeah.
So how does Shein get away with it? Because at the end of the day, you cannot value this like a technology company. That is not what they are. They are a retailer.
Yep.
They sell.
They're an innovative retailer.
Yes. And I think they should be rewarded a premium for being an innovative retailer. But you can't give them a technology valuation.
I agree. Does it ever trade at 64 billion again?
In the history of the company?
Yes.
Yeah, in 10 years.
In 10 years.
Like, I think it's a generational company. I agree with that. But I think they're going to have to they're going to have to raise prices. Here's the big challenge with Shein. America's probably their largest market, right? They don't even sell in China. If we change the law where we tax consumer goods directly shipped from China to US, it's a 20% increase on every fucking item.
Isn't Mayor Pete dealing with customs?
Yeah, well, they'll probably give them a tax credit.
But I mean, transportation deals with the ports. The ports determines customs rates, right?
Yeah. Yeah, it's really fascinating. But I look, I think what's going to happen with Shein is that like they clearly they've built this infrastructure that's so fascinating, and I think they're winning. The company's going to be humongous no matter what. I just think it's just the value is just what it is.
And these will just be slow cuts, 100 to 64, 64 to 40, 40 to 8.
Yeah. 8 sounds rough, but yeah.
No, because Stripe, which is, tier 1 of tier 1 private companies that everyone has worshipped, at its peak in the private markets was trading 230 billion. Today it's 64 billion.
Which is probably still high.
And trades are getting done at 64 billion. It's crazy.
I'm shocked that people want the stock still.
They are obsessed with those two brothers.
Yeah. They're good. They're good at talking.
Them are the Ball brothers.
Me?
Yeah.
I'm long the Ball brothers. Yeah. LaMelo Ball, if I had to invest money today in Stripe.
Stripe at 64 billion and LaMelo would take LaMelo.
You take your...
Yeah.
Yeah.
I agree with that.
There's a lot more upside in LaMelo.
Yeah, and he's considered cool on TikTok.
It's like, was he even 21 yet?
Yeah, he's 21 probably, 22.
Yeah. I'm long. I'm a long ball.
Long ball.
Yeah, that's interesting. Yeah, we'll see. I mean, I'm sure they'll get the money. It's not going to be hard for them to get the money.
Oh, apparently it's done.
Okay,
it's the
done.
same investors.
Yeah.
Sequoia, a couple others.
Yeah. There's another not fashion, but another e-commerce company called Temu, Temu.
Based in China?
Chinese company. They've now launched in America. I think it's the top shopping app right now. It's basically a discount. It's like if Dollar General had e-commerce. All non-branded goods. It is dirt cheap shit. Like stuff, they're selling stuff for under $1 with free shipping.
Yeah.
It's like Wish done better.
What happened to Wish?
They Wish.
We haven't heard about that company in ages. That was another darling.
Yeah. And this Temu is a dangerous company too, in my view of like, it's going to have a traumatic impact on American retailers. And there's no way you can explain to me the unit economics of this company make sense. You cannot ship goods, a rice cooker from China for $20. Fuck no, you can't do that.
Yeah.
It's impossible. I don't know if all the goods are based out of China, but you can't even ship it in America for free.
I don't know how retailers don't have lobbyists in DC. They're all big companies.
Yeah, like for example, if I was Walmart, forget like regular run-of-the-mill people. If I was Walmart, I would have the law changed on allowing goods shipped directly from factory to U.S. consumers without duties. Why does Walmart have to pay duty and pass that cost to its customers, and Shein doesn't have to?
We know Walmart is an extremely sophisticated company. Do you think, they have the direct line to any administration, whether it's Republican or Democratic. Do you think they've had the conversation?
I think outside of the C-suite, in the decision-making pool, how many people at Walmart know what Shein is? Out of the C-suite, I think knows.
Yeah, but the C-suite would also know this loophole in the customs.
Yeah, I'm sure they do. They may not think it's affecting their business.
Yeah, maybe not.
And it probably hasn't.
Or they pick and choose what battles that affect them. Because Shein hasn't dented Walmart's business. It's dented like all the fast fashion retailers.
H&M, Zara, which aren't American companies, got dented.
Yeah.
All right. We'll see what happens. All right. Here's a big stat here. The richest 1% of people amassed almost 2/3 of new wealth created in the last 2 years. But that's also evaporated too, right? Can we say that's...
Well, it depends. It probably evaporated a third.
Yeah.
So they're still up 50%.
Well, because think about it. There was an asset inflation.
But most people's assets are their homes. That's the biggest asset.
Yeah, the
class.
problem is, but if you own a $50 million home and went to $75 million, if you took the total quantum of dollars, it's just going to be...
I think the bigger thing is This is why high-end luxury, high-end hotels, high-end experiences, whichever they may be, have not been dented whatsoever with all this market correction. They made so much money that even with this 25-30% decline in the stock market over the last 15 months, which is outside of your home, it's your public equities. Those are your two biggest for the top 1% at least.
Yeah.
And homes haven't corrected, top 1% homes.
No.
They've corrected in small markets, like in Arizona, outside of Vegas. Those aren't top 1% earners. So people have made so much money in the last 2 years. It's the reason why, like, you go to any 5-star hotel, it's slammed.
Yeah.
Completely slammed.
Yeah. Even, was it the All In podcast or some other podcast? They were talking about Vail. And they were saying how crowded it was. Oh,
all those places.
Yeah.
Vail, Whistler, Aspen.
Yeah.
So when Powell keeps talking about how demand's still too high, is he referring to high end? Like, does he, when he's at Jackson Hole, he goes to the Four Seasons or the Amman, and he's like, oh, I got to keep hacking rates or raising rates.
Yeah. But the thing is travel demand, high or low, has not slowed.
No, it hasn't.
It's absolutely on fire. And so But
this also shows how much inequality has increased in the country in the last 2 years.
Yeah.
It's widened by, this is staggering. I've never seen the stat like that in our life.
It's widened. Mm-hmm. And I think I don't know if it ever corrects.
It won't.
It can't correct. It's just going to get worse. The thing that I think where there is an opportunity that's happening right this second is in this like white collar recession that's happening. There will be opportunity for lower income folks to make some upward mobility in terms of wage. So like, I think if you're a $50,000 earner, to get to 75 pretty quickly is very doable now, because I think there's a deeper appreciation from employers that this cohort of people, like, we got to take care of them. Even I saw something that targets raising minimum wage to like $24 an hour.
Yeah.
For certain jobs, up to 24, depending on the state. And so I think like you are seeing, I think there will be some serious wage inflation on the lower end of the spectrum, because like people realize that like, hey, the $50,000 person was underpaid.
Mm-hmm.
They probably should be making 60, 70, 80,000. What is clear is that manager making $250 is overpaid.
Right.
That they're not adding enough value to the company. Like, I'm sure if you look at the distribution of these tech layoffs, it probably leaned in on higher paid kind of middle management.
Yeah, like 250 to 350.
Yeah, like, do you really need those people? Like, what value are they adding to the organization? Whereas like an entry level, like if you'd rather have a fresh out of college $80,000 employee at Microsoft than someone that's been there 30 making $500,000. That $80,000 person is probably going to add more value over the next 5 years.
Mm-hmm. Yep.
And I think that's going to be the challenge for a lot of high earners that in corporate America. It's going to be really hard to like,
replicate that income.
Yeah. You're going to have to be.
Like if you got laid off at Facebook and Microsoft's laying off people and Google has a hiring freeze, where do you go?
Yeah. I mean, you could go to a startup. You just have to take a pay cut.
Yeah. It's a big pay cut.
Yeah. But, assuming you've stacked a lot of chips over the years,
right?
You get back there, stock, equity, bonuses. You can get back.
Got to pick the right startup.
Yeah. Interesting. All right. So, what's the news here? Peter Thiel. What's he doing these days?
So it's Founders Fund. They just like to use the words Trump backer Peter Thiel as the headline, but Founders Fund is the fund, which he started. And they've been in and out of crypto for years. And apparently they made $1.8 billion earlier in 2022.
They sold everything
before the market crashed. I know they sold in 2017 before the market crashed. Good traders.
Yeah. I mean, Peter Thiel is so damn smart.
He is. He says crazy shit.
He does say crazy shit. But when you look at like, one, what he's done as an investor, he's a co-founder in some like pretty insane businesses. The Thiel Fellowship, like put aside his like political views, what he's done is just he's like a great thinker.
Yeah, he's a genius.
Yeah.
There's no question he's a genius. But here's the thing. There's two things to note. One, large crypto holders like them have inside baseball, legal. I'm not saying it's illegal.
Yeah.
Of where crypto markets are moving.
Yeah. Well, I think that was just a market bet, right? Like I'm sure Peter Thiel sold all his public equities too.
Yeah, probably. But I think there were clear flows that were going on in January of 2022 before it really shit the bed. That these guys get to see order books that we don't get to see.
Yeah.
And they get to see where money's flowing. And they have access to like off OTC trades, which are basically where block trades. And if they're being told like no one's buying, because you could buy billions of dollars of crypto off chain. And if they get told like, hey, by all the big OTC traders, like there's none of that's going on anymore. And then they realize, oh my God, it's all retail right now.
Yeah.
Let's get out.
Yeah.
And then the second thing is they're a fund that makes 2 and 20, I'm assuming. So when you have this big of a gain, you want your 20% on your 1.8 billion.
Yeah.
They're not an individual holder that's like, I don't care, I have a 10-year horizon. They get paid on the profits.
Yeah. Hot move.
Great for them.
I want to learn more about Peter Thiel. Should I read his book?
You should read his book. And I said the name once on a pod. I'll find it for the next pod. Who he like brought on as a life coach and basically taught him all his like political and government beliefs. And that dude's crazy.
Yeah.
Nuts. I'm going to get the name. His name is Curtis Yarvin. I recommend everyone go on their Wikipedia page and see how crazy this guy is.
Okay. Someone else that's cashing out assets, Dr. Dre is selling his music assets to Universal Music and Shamrock. Do we have a number here?
It says 250 million.
That's it?
I think people need money. These are all fire sales, I think. He just went through a divorce. I'm sure his lifestyle is insanely expensive. And someone's
I guess what assets does it? The key is like what assets does it cover? These assets include mainly passive income streams. Okay, according to these sources, such as artist royalties from two of his solo albums and his share of NWA, which may include the writer's share of songs on his Chronic album. Okay, I don't know. I want to know what the asset actually gets you.
Well, I mean, whatever it is.
I mean, he made money for Beats.
Yeah.
He got hundreds of millions of dollars.
I think it was the low 100 millions because I think it was like 100, 200 million. It was all revealed in the divorce settlings.
Yeah. So let's say $200 million, right? So, I mean, he's rich.
He's rich, but then he lost half.
Yeah.
At least.
No, I think he got away cheap.
Did he?
I think so. I think there was something, pay like 20 million or something.
Maybe. But whenever I see one of these big artists selling that's still relatively young, like if the older artists are like, I'm 80, like I'd rather have 200 million now. Who
I
cares
get the
for my
older
estate?
artists. And by the way, like, who cares? It's like,
Yeah. And so either going to your estate and maybe you're like, fuck my estate.
yeah. Or yeah, I'd rather have cash for the estate. And that way there's no discussion on what happens
when
to
to sell it.
Yeah.
Right. Because that would be the heirs who have to argue and fight. So I get why older artists do it. Whenever I see an artist that's not that old do it, I just think they need the money.
Wow. So you think Dr. Dre needs money? Would you say that to his face?
Of course not.
Okay.
But I am saying for his lifestyle, he may need money.
Yeah.
For our lifestyle, he doesn't need the money.
No. Yeah, he definitely does not. That's interesting. Pretty like amazing assets to own here. Like to me, owning Dr. Dre's publishing is priceless.
Yeah, it's timeless music.
Yeah, it's like owning like a Picasso.
Yeah, I mean, maybe it's just the state of rap. If you turn on Power 106, which is the radio station, hip hop radio station in LA, it's all 90s and early 2000s
You hear
music.
Dr. Dre every day.
Yeah.
All day, every day, you're still playing Dr. Dre.
Mm-hmm.
Like,
they did the halftime show. That's as mainstream as it gets.
that's what I'm saying. Like, this is like for 200.
So why would you sell it?
Forget why would you sell it. Like, I'm shocked at the price.
Maybe he needed the money.
But I'm saying, you know, how has no one else realized that this is like owning Van Gogh?
Yeah, I think if you're seeing the scale of all these private equity companies just coming in the last 2 years, and they do the math,
Yeah.
it's going to be paid back.
Yeah. And like, yeah, especially, you know, like art is like an illiquid market, right? Like, you know, when you buy a painting, it's not guaranteed there's a buyer.
This is as liquid as it gets. Stream comes, money comes.
Yeah.
Look at what the streams did last year, the year before. Did they fluctuate? No. So it's guaranteed.
And the price of streaming will only go up from here.
Exactly. And the price that the streamers are going to have to pay, the streaming services are going to have to pay the labels is only going to go up.
Yeah. It's such a good business.
Mm-hmm. But it's wild that all these superstars, super duper stars are doing it.
Yeah.
They're getting taken to the cleaners.
I have one song. Who wants to buy my publishing?
Sell it to Shamrock. 10 grand? Would you take 10 grand?
I would take $5,000.
Would you take 1,000?
I wouldn't take 1,000.
So somewhere between 1 and 5.
I would say 5 is my floor. You give me $5,000, Shamrock, you can have my publishing. Well, what's interesting, because I was asking our friend John about this. Apparently, it's only for music that they've already created, right? So if he goes out and makes an album tomorrow and has a hit song,
He's been trying to make an album for 20 years.
yeah. So, but my point is, if he were to produce something new, it's not included in this.
Yes, that's correct. So you're betting on yourself to be bigger than you were before.
I like it for a young artist. Sell it. If you're a 25-year-old, sell your publishing. You know you're going to go make a couple more hits.
If
Like someone like Future, he sold his publishing. Great. Good move. Fuck it. He's still going to have more
I
hits.
think that was a good deal because his music, it's a good deal for Future. I think he won.
Yeah.
We don't need to say his lyrics, but we all know the lyrics. Like, is there a world in 60 years where people are still saying those?
I just
lines?
effed you in the Gucci flip-flops.
Yeah.
You don't think people were saying that?
And the lean and the codeine.
Yeah.
But if you look at Bieber songs, those are getting played forever. History of life. As long as life exists on Earth,
Yeah.
those songs are being
I
played.
mean, Dr. Dre's lyrical content be questionable, but it'll be played forever.
It's considered a classic.
Yeah. So he's Mozart.
Modern day.
Amazing. I'm fascinated by this entire like music asset thing. I feel like it's private equity found like a gem of
Mhm.
extremely undervalued assets.
And they have the other trade where the owner of the asset would take the money.
These are priceless assets to me. Like specifically music catalogs.
Yeah, I wonder what banks lend against music catalogs. It's a
Arch.
liquid asset.
Yeah. Good product for Arch.
Yeah.
For sure they definitely lend against it. They've got to.
Yeah, of course.
Whatever. These guys are going to create it anyway. Shamrock and Blackstone, they'll create it. They'll
Right.
create a lending product for themselves.
For sure.
All right, moving on. I don't know where Dr. Dre lives. Does he live in Beverly Hills?
No idea.
Malibu, I think. He lives in Malibu. I don't think he has to worry about this, but in Beverly Hills, the police presence and now the equipment is getting a massive upgrade. What is this article? They have drones. They have...
So they have everything. Every ounce, or not ounce, every inch of Beverly Hills is being watched right now by cameras, drones, and there's a command center, which is the Beverly Hills police station that, I think it's Rexford, right? Rexford
Yeah.
and Santa Monica. And they have people watching videos all day. And when they see suspicious behavior, they deploy units.
Wow.
And this is the most extensive in LA for sure. I mean, we're already in a police state, like pretty much every corner is watched, but it's watched by like footage that has to be, you have to go back and look at it.
Yeah.
Versus this is real time, people are watching. So if they see something suspicious, they'll, try to solve it. So it's very interesting from a civil liberty standpoint, how do people sue? Or do people just like, shit got too unsafe? Like,
Well, Beverly Hills is its own city.
yeah, it's its own
So
city, own mayor.
I don't think anyone in Beverly Hills is going to complain about this because of just the last couple of years.
Yeah.
If it was the city of LA, you'll get pushback.
Yeah, this could never happen in the city of LA.
No, the city of LA couldn't make it happen.
Because if you think about it, like the people that they're going to stalk are going to not be Beverly Hills residents.
Yeah.
Because they're looking at license plates.
Yeah.
License plate right away, you know if it's a Beverly Hills
Yeah.
registered license plate. So if you're not from Beverly Hills,
Stay the fuck out.
I mean, you're going to see some bad instances,
Yeah.
right? Inevitably.
Meaning what?
They're going to arrest a person that wasn't doing anything.
You don't get arrested for doing anything.
What do you mean? You get detained. Sorry.
No one gets arrested for doing nothing. Nothing is not why you get arrested. You have to do something to get arrested.
I'm just saying.
You don't just walk down the street and someone arrests you. I think you can drive
or you
and
get followed.
Yes, I think
That's going to happen for sure.
yes, I think
Someone's gonna see a video of someone that like, this guy looks suspicious.
he's looping around.
Can you send a team?
Yeah. I think the challenge that the city of Beverly Hills has is that they've had so many incidents in the last 3 years that I think they're willing to roll the dice that the citizens of Beverly Hills care more about their safety than the civil liberties of the passerby.
100%.
Yeah.
That's without question.
Yeah.
I think that's 90-10.
I would say it's 100.
No, I'm sure there's some hippies.
Where in Beverly Hills are there hippies?
Inherited homes.
Yeah.
There's people that have inherited generational homes that could be like
Big
an
civil
AOC
liberties.
fan.
Yeah.
AOC would be terrified of this.
Yeah. It's unfortunate, but there's too much crime. I mean, the incidents that are...
I'm sure people in Hollywood that paid millions of dollars for those condos would want this.
I'm sure everybody quietly wants this.
Mm-hmm.
You know, like most people are minding their own business going through life.
Yeah, most people aren't committing crimes.
No. It's a few people that have caused all of this kind of chaos in terms of like the challenge of policing our cities now.
Yeah. It's interesting. They're stepping it up.
Yeah. Well, Beverly Hills, to me, there were some incidents that were just insane that would happen in Beverly Hills.
Yeah, insane. And it's most tourists go to Beverly Hills. The whole place is tourists.
Yeah. And how do you not have safety for, that's your entire industry is tourism.
Mm-hmm.
Like that's Beverly Hills' reason why it exists.
Yep.
Fascinating. All right. Well, moving on. At least we're about to get some good content.
Yeah, it's back.
The Don is coming back to Twitter and Facebook. So he's obviously making his presidential run. Truth Social reach is clearly not working. So, I mean, who is he insulting first? I'm going
DeSantis.
He has to.
I don't even think he's going to talk about Biden.
Not yet. There's no point. You got to get through the primary.
It's just, what's the nickname going to be?
I'm sure he's got an entire team of people that are just like
a writer's room.
Yeah, of just throwing insults.
Like these late night shows have writer's room where people just write jokes all day.
Yeah.
You think he has a writer's room, just insult these 10 people?
I mean, he should go to the Laugh Factory and hire 2-3 people. They're
true.
Really funny.
Any of those comedians.
Yeah. Just be like, hey, I'll give you, for every insult you come up with, I'll give you $1,000.
Go to the Jeff Ross roast battles.
Oh, yeah.
Those guys are really funny.
You should hire Jeffrey Ross. He's hilarious.
Yeah, he's hilarious.
All right. Well, at least we know that the content is going to be phenomenal.
And Elon tweeted, I wonder how many more federal investigations we're going to have now that Trump is back on. Meaning federal investigations against Twitter.
Yeah. Very interesting.
Stirring the pot.
Yeah. I mean, he knows he's bringing the heat with bringing him back on. But Facebook is too. So.
Well, Twitter needs to.
Yeah. But Facebook, it's interesting that
still a cash cow.
Yeah. All right. Last news before going into a special interview and then winners losers content. Davos is back. Davos is this annual meeting that happens in Switzerland and this fancy resort town. It's a 5-day summit, and it's like, the CEO of Pfizer and world leaders, and like it's like heavy.
Everyone's there.
Everyone's there, and if you ended up perusing Daily Mail in the last day or two, they're talking about Davos. There's another group that's gathering at Davos that has made
who's
headlines.
that?
Prostitutes. Prostitutes have skyrocketed because of Davos.
For the week.
Yeah.
In Davos, Switzerland.
Yes.
And they're staying at the same hotels as all these world leaders.
Yeah.
Because a few of the workers, sex workers, have come out privately and talked about how it works. Apparently, they dress up like businesswomen so they don't stand out.
They wear a suit.
Wear a suit. And they're stationed next to like super big politicians, business leaders that they've been hired for.
So let me give you some numbers here. The manager of one of the escort services, 100 miles away from the summit, says she has already received 11 bookings and 25 inquiries.
And they actually give the rate on.
So it's $760 an hour, $2,500 for the whole night plus travel expenses.
People are shameless.
Oh my God. Please do not put this on TikTok. This cannot go on TikTok.
What I don't get about the attendees of Davos, if that's what you're choosing to do, why do it at the most high profile place? Or is it like a competition?
It's a competition. You think you had a record year? Let me show you a record here right now. This is such a joke. Fucking idiots.
I mean, this is the one thing I'll give credit for. Elon's like, I didn't go to Davos because it's boring as fuck. That's what he tweeted.
Maybe it's not as boring as he thought. There's a whole other crew doing other things.
I think if he knew it was going to be that abundant, he might.
It's interesting, like the concept of Davos, put aside the sex workers, the concept of Davos actually irritates me because it's so out of touch. These elites talking about climate change and they all took private jets. It's just like, come on, like just stop these stupid conferences. What is happening there that's so valuable?
I think we just figured it out.
So it's just a sex conference.
Yeah, it's a big sex conference.
At least if they said that, people would be like, all right, whatever, go have fun.
Oh boy.
So funny. All right. Next up, we have a very special interview with two founders, Himanshu and Dhruv, the founders of Arch. Himanshu is a day one Run Club member, day one Kathy. So excited to have him on the pod and learn about his new business. And then right after that, we're jumping into winners, losers, content. Let's go. All right, everyone. We have a special interview today. And it's a fun story because one of the co-founders of this business I met literally, was it the first time we did the Run Club, Himanshu?
It was, I think I was the first non-5-foot person there. It was back when we were behind Alfred Coffee.
Yeah, so that was 5.5 years ago, right? Yeah.
2017,
yeah. 2017, August. We had just started the Run Club, which was at that point in West Hollywood behind Alfred's Coffee in the alley. And you introduced yourself. I think you were at Tinder at the time. And you're like, I'm new to LA. And you just kind of showed up and, showed up every week. And I remember vividly, you're just like, yeah, I don't really know a lot of people. I know people at work. And, I over the next 6, 12, 18 months, I saw you. Obviously, you became very close friends with a lot of people through Run Club, but then you became very social, became a social butterfly over the next couple of years.
Well, you guys had a lot to do with that.
Yeah, so it's fun to see you all grown up now.
All grown up.
But yeah, let's get into this. So you guys made an announcement that you are launching a new business in the fintech space, and you briefly told me about this a few months ago in New York, and it's excited to see that it's launched, and it's excited that it's launched on the heels of one of the more valuable Web3 assets, which is the Chatty Cathy Club. Which, I mean, the amount of lending you're going to have to give against this token is going to be pretty substantial.
Yeah, everyone should go get money from Himanshu.
Himanshu right now. So we have Himanshu and Dhruv on to talk about their new business, Arch. I'll let you guys explain it because I don't want to butcher it. But exactly what are you guys building?
Absolutely. First, thanks for having us, guys. This has been something I've looked forward to for a long time, so very excited to be here. So I'll start talking about why we did this in the first place, and Dhruv can explain exactly what we do. So about a year and a half ago, Dhruv and I were coming up with the same issue where a lot of people around us, and us included, were increasingly allocating their net worths into what some might call alternative assets, crypto, equity in high value private companies, and such. And we quickly found that there's not much opportunity for liquidity in the space. At the time, there were players like BlockFi, Nexo, and Salt Lending, all of which aren't around anymore. And there just wasn't one good place with a consumer-friendly experience where you could go get a portfolio against your entire get a loan against your entire portfolio of assets. So that's kind of what led us to start thinking about this and go down the path. And it evolved a little bit since then. And I'll let Dhruv get into that.
Yeah, essentially what we're building is a financial services company focused on individuals that have alternative assets. The first product, which we launched yesterday, is a lending product. And we're starting against crypto assets. But later this year, we'll be expanding to public equities and equity in private pre-IPO startups. So the point being, any individual that holds these assets can come to us, get a loan against them for whatever purposes they want. Either it's to buy a house, make larger purchases, or even handle larger expenses that have come up without needing to sort of sell the positions that they do own.
So do you have a bank backstopping the lending? Who's securitizing it?
Yeah, so currently we're doing it off of our own equity funding that we've raised, and later this year we'll be raising debt funding from credit funds, hedge funds, and the likes to support the lending book.
So one of the things, in this new like fintech space, people all, are trying to be creative on finding ways to give people liquidity and credit. And, the challenge is like the underwriting, like how do you get comfortable with giving people money? And I've seen a lot of clever different ways to do it because it's something that's like crypto or potentially secondary, private companies' stock. How do you guys get comfortable with underwriting? And then, those are pretty illiquid markets. Crypto's liquid, but let's say private companies, how do you kind of get comfortable with that?
Yeah, so I think on the crypto piece, we're over collateralized in that sense, and so we also have the ability to liquidate these assets as needed. So that gives us like comfort in the event the asset pricing drops. We have the ability to sell, make ourselves whole as the lender, and return the rest to the borrower. On the other piece of equity and pre-IPO startups, I think two things that we're looking at there. One is just being very selective with the companies that we do underwrite. Like you can imagine Stripe and a handful of others that would even pass the category here. And then second is having personal recourse to the individuals that borrow, saying, look, like you may have other assets that are just not this equity. And in the event you fail to pay us back, like we have recourse to a broader set of your asset base. And then the last piece, which we're exploring, is seeing how you can potentially have backstops from folks that buy secondaries. And so you sort of like offload the risk there, saying, hey, I've lent out against, X company's shares. In the event they don't pay, like I have ownership of them. And you have an agreement with a secondary firm saying, yeah, we'd love to buy it at an agreed upon like discount.
So right now, sorry, go ahead.
No, I was going to say still a lot of like things for us to figure out there as we're not close to launching, lending against those types of assets yet, but that's just kind of how we're thinking about it right now.
So let's say you have one Bitcoin, and for round numbers, let's call it $20,000 right now.
Mm-hmm.
They go to Arch. What can they lend against that Bitcoin?
So
yeah, they can borrow. Sorry, continue, Himanshu.
So they can lend up to $10,000 against a $20,000 worth Bitcoin. That's 50% LTV. And they come in. It's super simple. You come in, you choose your asset. You can also add multiple assets there, so it doesn't have to be just Bitcoin. You can add your Ethereum and a few other assets there as well. You come in, we'll send you an address to send the money to. We never touch the funds. It goes to BitGo, which is a qualified custodian. It's a US-based SEC regulated trust. Your funds are there. They're safe while you're in the loan. And once you pay us back at the end, the funds go back to you. And you can get a loan in USDC or in US dollars.
So if Bitcoin goes to 9,000 and they haven't made that 1,000 whole, you guys have the ability to liquidate.
Absolutely.
And is it a monthly repayment or is it a lump sum repayment? How does it work?
Yeah, there's two types of loans that the customer can choose. One, both of them have monthly payments. The first is just interest only, and then they lump sum the principal back at the end of the duration of the loan. And then the second is amortization, where you're slowly paying down the principal every month as you go as well.
And so how long what's the term of the loan usually?
Yeah, currently we're max capping out at 1 year durations, and then we're looking to expand those durations as we continue to grow.
And then what type of interest rates can people expect? Is that based on the asset or is that based on just the market?
Based on both. Right now with crypto assets, we're between, I would say on the higher end, 10 to 15%. And it continues to just vary based on what happens with Fed funds rate. And so as there's continual hikes there, we might be increasing rates as well.
Got it. And then when you say crypto, is that just actual currency, or if you own $1 million crypto punk, can you get money against that?
Yeah, that's a good point. So it's a select list of cryptocurrencies and then a handful of collections on the NFT side. So CryptoPunks, Bored Apes, and I would say 2 or 3 other collections that we currently support.
I mean, you guys got to lend against the Kathy. It's $250.
I think we can work something out.
Yeah, you got to at least lend $100 on that. I don't think that's a tall ask.
I think we can work something out.
That's interesting. And so, given that there's so much fraud and just complete collapse and probably a loss of trust by a lot of it, not just people but institutions, very interesting time to launch this business.
Yeah, I think there's
the silence is reassuring.
I have a lot to say there. Let me start something, right? So we started building this in a time where there were the biggest crypto lenders out there, and they were all still solvent. And they all had an interest-bearing product where they would take your funds and lend them out further, and give you some of the interest that they got from it. All of those have failed now. And our thesis from the start has been we want to be regulated. We want to start off from a position of working with the government, not against it, because we're building something long-term here. Our thesis has proven true, luckily, and we'll continue to operate in a regulated manner. We're currently regulated in 31 states in the US and are continuing to get licenses in other states as well. We operate from a qualified custody, which is, again, SEC regulated, and we're not touching your funds through the entire life cycle of the loan. So that's why I think there's some key differences between us and someone else. And I'd like to present ourselves as the antidote to the mistrust or the loss of trust and the shady behavior that's happened in crypto over the past few years. I think we've gone from a time of being cowboys to a time of now there's government and you need to work with it.
I thought you were going to say cowboys and then Indians.
Well, the Indians are definitely here. Look at this call. There's 4 Indians in here.
Not that the Indians aren't allergic to fraud.
We've had few of our brightest be locked up in New York jails.
Yeah. But I think, look, I actually think it's actually the absolute best time to launch. And not the worst time, because there's such a distaste for the industry right now because of fraud that if you can earn people's kind of trust right now, it feels like when you're on the other side of this kind of bear market, you guys will be in a really great position. I also think you as founders aren't going to fuck around and take risk either, which is good, which is important because when you don't have like guardrails, we as founders take bigger risk, right? And I think now the industry has guardrails, which I think will help build better businesses longer term and prove that there is a viable like asset class, speaking particularly about crypto. But I do believe the concept of the alternative lending opportunity for a lot of really soon to be very wealthy people is an incredible kind of opportunity. Also in a down market, right? Where now the risk is substantially lower because these are now being valued more accurately, like where you can get comfortable with like, okay, cool. Like it's mirroring the public market. So great. We can get very comfortable with these valuations and lending against it. It's when, you know, if you had started the business 2 years ago, you may have taken a higher level of risk than you can now do.
Yeah, because all the lenders that went belly up didn't do it the way they described it, which is actually having over collateralized, sitting in a trust that can be automatically liquidated.
Yeah.
So it was the Wild Wild West. Funds were just handing out money, not really taking collateral, trading on their customers' accounts.
Yeah.
But what's scary is, you know, the 3AC founders who lost billions of dollars, like 22 years old. They just closed a $25 million round for a new crypto project, and they should probably be in jail.
Maybe the jails are funding them.
So I was just like, we just went through this.
Yeah. It's a really interesting, I truly believe that funds backing failed founders is actually a valid concept because you've been
not when they're likely criminal.
I didn't say criminals. I just said, they tried and it didn't work out.
Those two 22-year-olds should probably be in jail.
Yeah. But they'll be billionaires.
Yes.
Interesting. Well, congrats, guys. So if people want to learn more, I know a lot of Cathys have crypto assets. How should they do this?
Absolutely. So you can go on our website, archlending.com. You can also reach out to Dhruv or I directly. Himanshu at archlending.com or Dhruv at archlending.com. We're also on Twitter at archlending and on LinkedIn we're arch. But yeah, anyway, reach out to us. It's currently operating under a waitlist, but if you mention your interest, you can book a call with us directly. We'll walk you through your options and we'll try to get you off within a few hours. And yeah, then you can go and configure your loan and move forward. But looking forward to hopefully hearing from some people and being able to help out people from this community.
Yeah, congrats, guys. I think the entire like concept is definitely going to be needed, and you know, I could see it kind of, and I'm sure this is in the pipeline. Like, why can't you get a loan against your baseball cards and your Pokemon collection? And
absolutely,
I mean, it's the same thing. It's as valuable as anything else these days, right? Like if you own, like I know kids with sneaker collections that are worth millions. The fact that a bank, if I were to bet, a pair of Jordans is probably more stable than like speculative homes in Glendale, Arizona.
Yeah.
And probably more liquid too.
Yeah, way more liquid. But yeah, and I think that's the future. Like this generation's definition of asset is just going to be different. And the fact that they can't get access to capital is kind of crazy.
Yeah.
Like watches and this and that.
Watches for sure. They don't go down in value.
Watches are a huge one.
Yeah, there's just so many categories that feel like a ripe opportunity to lend against.
Yeah.
All right, guys. Well, sounds like you're going to be rich.
Don't worry, you guys are investors too.
Awesome. Well, thanks for coming
guys.
on. Good luck on the
Thank you
journey.
so much.
We'll be in touch.
All right, guys.
Thank you, bro.
Thanks for having us.
All right, great interview, guys. Congratulations again. Anand, who is your winner of the week?
Oh, the NFL. They got blockbuster games this weekend. They're gonna
I forgot about the NFL.
They're gonna shatter records. And they're good games. Cowboys, Niners.
Oh my God, that's blockbuster.
Blockbuster brings you back to the 90s
Yeah.
when we were growing up watching football.
Yeah.
I mean, they're going to break every record, and the NFL is bigger than ever.
Oh, I'm excited. I totally forgot.
Yeah.
Totally blocked my mind.
I hope DeMar can attend.
They're saving him for the Super Bowl.
They may not be there after this week.
He'll be there either
They
way.
may need him for this week.
Yeah. Who are they playing? Kansas City?
The Bengals.
Bengals. All right. My winner of the week is China. I read a report that luxury shopping in China is already roaring back.
Yep.
Cartier, Burberry, and they're seeing pretty big bumps in Macau with travel already. So despite all the fear that you're hearing about people being sick and debts and stuff like that, China is resuming normalcy, and clearly they're back to spending. The one hope I do have for like the global economy is that China comes so roaring back that you basically stabilize the entire world, but it does put pressure on like commodities inflation, where things like oil prices and probably some precious metals, things like that, end up becoming inflated. But it's a really encouraging sign that it's not going to be as bad as, like China's resembling America. Like they just want to go back to their life.
Yeah, as long as you give stability now that Xi is emperor for life.
What does he care?
Yeah, just let people live.
You want to go to Cartier? Go buy whatever you want.
Mm-hmm.
That's awesome. But encouraging signs. As soon as the doors open, boom, travel, spend.
Yeah. It's going to be crazy.
All right, who's your loser?
Twitter.
Wow.
Ad revenue, the information leaked yesterday. Twitter's ad revenue fell 35% in the fourth quarter over quarter, year over year.
Okay.
And it's 72% of Twitter's own projections. They're in trouble. And then Unusual Whales, which is a fun Twitter account to follow, encourage everyone to go follow Unusual Whales, tweeted yesterday that their Twitter headquarters were auctioning off like espresso machines and coffee makers. Things a disaster.
Well, you got to sell it.
What are you going to get for an espresso machine?
Those are pretty nice. I went on the site and looked at it. It's like a $30,000 espresso machine. You get $5,000 for it.
$5,000 for an espresso machine or your song?
What's more valuable?
Yeah.
The song.
There you go.
The joy. The espresso machine's going to break in a year. All right. My loser, U.S. government.
Okay.
Hit the debt ceiling.
Does it matter?
It doesn't matter. It's just the charade of the government fucking is embarrassing.
Mm-hmm.
You're going to raise it anyways. Why even let it hit? Why not last week? Hey, we know we're going to blow through the spend. Let's go do it.
Yeah, I totally agree with
$31 trillion is the debt.
These numbers are just all like, who cares?
Yeah, annual revenue, 4.9 trillion. Annual income, 1.4 trillion.
This is
loss.
why, like the guy we talked about, Peter Zahan.
Yeah.
Or Pete Zahan.
Yeah.
How he says like crazy shit because, you could probably connect the dots and say, this is why China's going to be in trouble in 10 years. They're not going to have energy and food and whatnot. Do you know how many people for the last 20 years have said when the US hit 20 trillion, the economy is going to fall apart. When it hits 25 trillion, it's going to fall apart. We're 31 trillion.
Yeah.
Nothing's happening.
No. Because it doesn't matter.
Exactly.
Yeah.
That's why I think, these thinkers are really smart.
They're right.
It should matter in theory.
In theory, it should matter that we're like, do we really care that the debt ceiling's hit? No one's day has been ruined because the debt ceiling hit. Nobody even knows what that means. What does that even mean? How'd you even come up with that number? Is it even real? It may be 50 trillion.
It could be.
We don't know what we spend money on.
All these numbers are irrelevant.
Yeah.
CPI, debt ceiling.
Yeah, we all sit around waiting for the inflation number. Who fucking cares?
The market does care, so that's why it's relevant, but it actually doesn't matter.
No.
No one's changed their behavior.
Yeah. Yeah, we see it, we laugh, we tell a joke. And
Who's not eating eggs?
No, I mean, we just ordered like 70 eggs yesterday.
Right.
Just because in case things get out of hand.
How much do you think a dozen eggs in Erewhon is?
$30.
That's 10.
Is it?
Isn't it 7 at like the Ralph's?
It's more than that. I think it's like $10 at Ralph's right now. And Erewhon's 10, okay. It's like $4 an egg there. You want to make a 3-egg omelet at home? It's like
you know what's
$20.
funny is like the old school saying used to be like, if you're low income, poor people eat eggs and beans. Like you're rich now if you eat eggs and beans.
If you take a Uber in the rain and have an egg sandwich, you're a millionaire.
Yes,
There's nothing richer.
I agree.
I looked at every time it rains and I have to take an Uber, it's $40 to go down the street.
Yeah, even Uber X.
Yeah. Uber X, $40. The other day, I just refused to, and I just walked in the rain with an umbrella. It was so absurd. All right, moving on. Content recommendations.
I mean, it's my winner.
NFL.
It's the only thing I'm doing all weekend.
Okay. Mine is Ginny and Georgia on Netflix, #1 TV show. I watched season 1.
Give us the premise again.
Okay. A single mom and her 2 kids move into a new town. She had these kids when she was like a teenager. The guy that she had the kid with was like a rebel, like left her, comes in and out of their life, but she has like a dark past, like with her ex-husband, and it's like a dark comedy. There's some dark, it's a little.
You're not into dark.
I'm not into it. I didn't think it was going to be dark.
White Lotus is dark.
Yeah.
And you didn't like it.
No. This is still funny though. White Lotus is funny too, right?
Yeah.
Kinda. This is like teen dark. I can handle it. PG-13 dark.
You should watch Euphoria. It's teen dark.
I think that's like NC-17.
Yeah, it is NC-17.
This show is more like PG-13. But it's very entertaining. So I recommend it. All right, let's move on to shout outs. So a big birthday shout out to Robert Gamch, who I've met in Vegas, I believe, from his girlfriend Ari. And he's turning 38 years old. So happy birthday. He's actually in Dubai at the opening of Ling Ling at the Atlantis, the Royal Dubai.
When we saw this shout out, I was like, I just saw this name. He's with Mike Snedegar, who also listens.
Oh, amazing.
In Dubai.
Dubai's hot.
Dubai's hot.
A lot of action happening in Dubai. So happy birthday, Robert. Maybe we'll see you in Vegas soon.
Mm-hmm.
Actually, I'll be there for all the trade shows.
Yep.
Awesome. All right, next. Next is a big shout out to Chad from Chad. I like that. Wanted to give a shout out because he grew his clothing brand from $0 to $400,000 a year, and now taking the leap to be a stay-at-home dad and work on the business more and get out of the bullshit retail game after 12 years and the last 2 of heavy quiet quitting. Congratulations, Chad. He's based out of New Zealand, so any New Zealand listeners want to connect with Chad, hit him up. His website is zerofux.co.nz. So congrats, Chad. That's a big move. And last is from Alexi C. This is so funny. So if you ever go on our TikTok, there's always a TikTok user handle that says, I want to see a video of D running at full speed. I think Alexi, he or she, says this every single clip.
Why, they want to see you sprint?
Yes.
Why?
I don't know. I think it's a joke.
Are they saying like you're not fast?
I think Alexi is insinuating I'm slow.
So I would recommend you not sprinting. At our age, you may tear a hamstring, tear your calf muscle.
Yeah, it's pretty funny.
Keep it slow.
Yeah, I'm not interested in sprinting. It seems absurd, but it's funny because Alexi does post this nearly on every clip.
Okay.
All right. I think that's all we got. We will see everyone back here on Sunday. Have a great weekend. Stay safe. See you soon.